While in Nigeria, we see Nigeria's historic commencement of petrol production after nearly 3 decades of dependency on imports. It is a significant step in the nation's journey towards energy independence. The commissioning of the $20 billion Dangote refinery with a capacity of 650,000 barrels per day is expected to ease the country's long-standing fuel shortages, reduce imports, and potentially lower domestic fuel prices. For decades, despite being Africa's largest oil producer, Nigeria has relied on imported fuel due to the inefficiency of its 4 state-owned refineries. These facilities have long been a source of financial burden, costing the government billions in maintenance without yielding adequate production. The Dangote refinery, built by Nigerian billionaire Aliko Dangote, is positioned to end this reliance and significantly cut Nigeria's fuel import costs, which have been a major strain on the economy. However, the promising development comes at a challenging time. Recent protests across the nation Nigeria have sparked by the government's removal of fuel subsidy, causing a sharp increase in fuel price and general living cost. For many Nigerians, the increased price of fuel has made daily life more difficult, leading to widespread discontent. The inauguration of the Dangote refinery is expected to provide some relief by stabilizing the fuel market and reducing costs over time. Nevertheless, it may take months for the refinery's production to translate into lower fuel prices at the pump. Meanwhile, the Nigerian government faces immense pressure to address the immediate hardship caused by fuel high prices. If the refinery succeeds in reducing Nigeria's reliance on imports, it could boost the local economy by improving the trade balance and creating jobs in the energy sector. But if the current fuel price increases persist, the public's frustration could escalate into more widespread protests, possibly destabilizing the country. Well, there are possibilities that over time the refinery could alleviate fuel shortages, stabilize prices, and reduce Nigeria's dependency on costly imports. But then this could spur industrial growth, reduce inflation, and improve the economic outlook. In the short term, if the fuel prices remain high, the protests may intensify, putting political pressure on the government to reintroduce subsidies or offer additional economic relief. Continued unrest could hinder also economic progress and investor confidence. Well, Nigeria's success is refining its own fuel could position the country as a regional leader in energy production, potentially offering fuel exports to neighboring countries, thereby increasing its geopolitical influence in West Africa. The future for Nigeria with this news is quite a lot. We're anticipating